in gold and in silver, this is true for both of these physical metals, they are used across the entire spectrum and in every single sector of the global economy. So it has the broadest utility, right? And if something is used that extensively, what that's really telling you is that it has the broadest base of buyer.
Mm-hmm.
That's why gold has never, ever, for 6,000 years, it's never gone to zero because there are always buyers. When I look at intangible assets of any kind, they only have utility in one place. I think it's fabulous that you can hold a lot of wealth. And this is something, in my mind, what they share is that you can hold a lot of wealth in a small package, and it's movable wealth, which is critically important. I mean, real estate is wealth, but you can't put it on your back and walk away with it.
That's right.
You can certainly do that with gold. I mean, you just get a more and more and more rare coin or piece of jewelry or what have you, and it's easy to move a lot of wealth. What I have a challenge seeing is its utility. Other than that, I mean, it's not a good tool of barter because the price is so volatile, and it hasn't been proven. It came out in 2009. And that was in January 2009. And then quantitative easing came out in March of 2009. And can you imagine how much more would have gone into physical gold if Bitcoin wasn't around? The reason why money was invented was so that society could specialize. You could have a farmer, you could have, you could have a banker, you could have a baker, etc.
Division of labor.
Division of labor, exactly. And one person can't do it also makes a whole lot of sense. So when they were establishing what money is, and especially to sell it to the public, it had 4 key functions. And that's part of what I'm looking at. So it's a tool of measure. It's a tool of barter. It's a short-term tool of value to make sure that you are fairly paid for your labor. And it's a long-term store of value so that no matter when you use it, you are still being paid fairly for your labor. And its valuation, at least initially, was labor for labor. So it was a more fair system. And you're looking at the advent of fiat money. They've already removed, just by creating inflation, which is baked into the fiat money system so that it's by design, it loses value over time. It is not a long-term store of value. And what that did was it forced people to take more risk to keep pace with the inflation.
That's right.
What they're talking about when we're going into the CBDCs is removing that short-term store of value, because once we do that, then they have their finger on the button of monetary policy, which they can modify. And they've talked about this 24/7. And there are no limitations on how low they can push interest rates, which erodes your principal. I mean, it is that simple if you're paying that money. So now you're getting your paycheck going directly into the bank account that is immediately charging you negative rates. So the only function of money going forward, if they have their way, is as a short-term tool of measure. Okay, we're going to pay you this, and a tool of barter. So gold solves those other 2 issues. I can see the direction that we're going in. And I know that the Bank for International Settlements has carved out a very small place for private digital currencies like Bitcoin in their money flower. There's a much bigger area for commodity money, gold and silver, also in that money area. And, and the other thing, when you look at that flower, there's just this little piece that is not underneath central bank control. So for me, it's utility, because what I'm seeing as I'm watching it, and I've been watching Bitcoin since it was $7
Mm-hmm.
a coin, right? So I've been watching it for a long time. And what I see Wall Street adopting it
Mm-hmm.
way more than Main Street adopting it. And I see it being turned into a trading vehicle
Mm.
because everything has been turned into a trading vehicle.
Mm.
So I can't tell you what the true value is of Bitcoin, but I can of gold, and not what Wall Street wants everybody to believe, but its true fundamental value based upon history and the level of money that the governments and the central banks are creating. I've heard debt, which means they got to wipe out all the debt right now. And the other thing that I've heard is based on transactions. So money will be created into the system based on transactions. So the good of Bitcoin, presuming that, and I'm going to just bow to you because I know that you look at it at a different level than I do, is that it is finite,
Mm-hmm.
right? But what could persuade me is to see more utility. That's what could persuade me. What are the different ways and uses of it? Because right now it's movable wealth
Mm-hmm.
and it's trading wealth,
Mm-hmm.
right? I mean, it goes up to 60,000, it's back down to 18,000, it's up to 28,000, right? This is not right. But for gold, there's a lot of industrial uses. It's in space, it's in electronics, it's in dental, it's in money, it's in jewelry, it's in food. It's in every single area. So I don't know that Bitcoin has the ability to do that because it's not real, right? It's intangible. And that's really the challenge. And in my personal strategy, having studied currency life cycles, and I mean, there's plenty out there to study, you see these repeatable patterns. And everybody always says this time is different, but at the end of the day, it really never is. I know how severely undervalued gold is because a rising gold price is an indication of a failing currency.
Mm-hmm.
And once you really grasp the concept that this currency is losing all value, just like over 4,800 currencies have, right?
Right.
Then you start to make different choices, right? So, for me, I just feel a lot more comfortable with something that's tried and true. It doesn't mean that I never will buy Bitcoin or I never will, but the market cap has nothing to do with it because it's all manufactured. It's not real.